Good afternoon. It is Tuesday, the 6th of November, 2007, and the market's closed. S&P 500 did finish with a gain of $1.96 the last couple days. I thought maybe it was stabilizing and due for a little bit of a bounce, but only once it got past this resistance that we've been watching at 151.40. We do still have a declining 5-day moving average. That gives us reason for concern and makes me think that this level of resistance right here probably will be tested tomorrow, and if it can hold there, then it might give us another entry into this market here. But right now the market is back in control by the buyers in the short term. That declining 5-day moving average just makes it a little bit sketchy in here, and we can see that there's a potential for some Fibonacci resistance up near about 152.5. But the daily time frame, you can see there as well. We've got a real mixed bag. We've got this declining 10 and 20-day moving average. We've got the market back above the 50-day. It's held this 148 level. That's going to be our most important level going forward. So that's really what's going to have to be, we're going to have to keep a very close eye on. If we get it back down there, then there's the potential of a larger breakdown. But right now, it looks like the market has been saved from that potential breakdown. This morning, I thought there was maybe some reason for concern. The IWM got down towards that support it's been looking at, but we'll look at that in a moment. You can see today's trading. We were stuck underneath this daily VWAP for about the first half of the day up to about noon Eastern. The market rallied back above that, tested it, it became support, and then we had higher highs and higher lows right up into the close. So buyers were impressively able to get back a hold of the trend, and the market has been saved from a sell-off here at what I think is a very critical level, and that 148 is going to continue to be important going forward. Semiconductors, once again, they are bouncing from this 450 level that has been the support over the last year and a half or so, and again, just no real reason for any trades in these semiconductors, so we'll move on to the IWM. And the IWM looked like, again, that 78.40 level was being tested, 78, and it looked like it had the potential of getting hit. The market did not break down at that point, and like I pointed out yesterday, a lot of times, breakdown from levels where we've seen the market already down significantly. That is dropping from 83 to 78. Breakdowns from an extended level typically don't occur. So I think that what you had was maybe some short covering in here this afternoon. Market did make an impressive rally here late in the day after that early test of support, and you can see that same thing in here. This market was maybe a little bit behind the S&P 500 in that it broke past its daily VWAP around 12:30, 1 o'clock. But once it did and the buyers took control, they pushed them right up into the close here. So the 10-minute time frame, though, again, we've got a declining 5-day moving average. That means that basically if you're trading these things long, I think that you ought to be going home flat. I think they're better day trades in here. As far as Fibonacci goes here, you can see that the 50% level comes in at about 80.5. That's also approximately the location, 80.5, 81 of the 10, the 50, and the 200-day moving average. You don't like to see this either, that the volume was lower today on this rally. But again, the only thing that pays us is price. So let's see how the market acts when it gets back up, if it can get back up to that 80.5 or so, 88.5. But there still remains, I think, a lot of risk in this market. So just continue to be very careful. But when the market is showing you that the buyers are in control, it's time to be long. And the daily VWAP does a great job of telling you who has control for the day. So now we will take a look at the NASDAQ 100. And the NASDAQ 100, as we saw yesterday, it seemed as though it might be breaking down. I outlined that trade late in the day. That again, I wanted to go back to my blog and look at the after I put that trade on, I made a point of saying that I think the post was called The Forest. Don't lose sight of the forest when you're looking at the trees. And the trees are basically this mess that you see here on the 1 and 2 minute charts where you can put some great day trades in. The daily time frame, though, the forest, is something you want to always keep your mind on, because the path of least resistance on the longer term time frame still remains higher, so that any trades taken against the primary trend are higher risk, should be lower shares, and should be kept shorter in terms of time frame. They can be good when they move in your favor quickly, but you've got to take profits, and hopefully you realize that. Yesterday, as I said, as it was dropping, I was scaling out of it, even though it hadn't met my targets and I wasn't stopped out of it. I was buying back into the weakness. So you can see here that we've tested the 10. Now a couple tests of the 20-day moving average. The market is bouncing once again, and looking at the short term, with the 30-minute time frame, you can see that this 54.30 level, 54.40 rather, has been taken out. That's where we'd seen a little bit of resistance. So now we'll break it down to the 5-minute time, 10-minute time frame, and you can see where that resistance is. It's back above the 5-day moving average. That 5-day moving average, I think yesterday I said, was 54.30. It's back up above it. We saw this morning the sellers were not able to make a lower low when I thought it was breaking down. I thought it was kind of breaking down a little bit, or had the potential to break down, because I saw Baidu dropping very rapidly, and last time it did that, it kind of led to broader market weakness. But it definitely showed us in here that, again, one stock doesn't make a market. A lot of times you have one stock that leads the market, and that's how this market will probably correct, as we start to lose some of the leadership from the real high-profile stocks like Google, which had some initial weakness, but again, all-time highs in Google today, or in Research in Motion. Something's going to hit one of these stocks, and that's going to be probably the catalyst for a larger sell-off. It's going to come most likely unexpected. So just, again, we're up in some of these stocks in pretty good nosebleed territory. Doesn't mean it can't continue to move higher, but it does pose higher risk overall. So just continue to be defensive. Take profits, in pieces, and continue to trade in a disciplined way.